following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We have the Dow Industrials up 184, NASDAQ up 84, S&P's up 28, gold contract down $34, trading at $1,204 an ounce. Silver down 50 cents at $15.28 an ounce. Platinum down $5 at $9.30 an ounce. Copper up 2 pennies at $2.04 a pound. Light sweet crude, let's see where we're at right now. Light sweet crude, it's had a spread out here of a couple dollars all day long. We're at 31.15 down 76 cents. Light sweet crude had got up to the 33.78, gave it up. Bottom line is that you get 426,000 contracts up there. So that's saying, guess what? Light sweet crude will be right back up into those higher levels. Bonds, what do we have at the bond market? You get the 10-year note down 6 ticks, 130.27. 30-year bond off 28 ticks, 165.19. Both the 10 and the 30. They're coming off the highs. There's not big volume. We'll see if there's any volume through as we go into lower price in the bond market. King dollar. King dollar's up 893 ticks, 96.87. That's on light volume. You get an ABC structure on the way down. King dollar wants to get into this August 24th level of the 93 level. Euro is down 12 right now at 111, and the yen is trading at 113.91. Our phone number is 877-927-6648. If it's called, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We look at the SPY. You're up $2.66. You get 80 million shares. That's light volume. Guess what? We've already tried to bust out the bottom. You've tested the bottom. We've tested it 4 different times. Bottom line, can't bust out the bottom. Why? Because it needs more cause in order to blow through this August 24th level, which is 182.40 in the S&P. August 24th, that we had 507 million shares down there. First time that we came down. January 20th, you had 286 million. You tested it on the 8th. We did it with 191. We tested it on the 9th with 184. We tested it last Thursday with 219. So what does that set up? That sets up, bang, we're going to go back up the top side of that, which is 194.58. Bottom line, expect what you're actually going to see here. You're building a complex ABC structure on the way down. Your A to B point is established. Big volume on the way down. Your B to C, and this is how B to C's lay out, folks. They're always choppy. They're back, forth, all over the place. Bottom line, we're laying out a B to C right now, but this B to C can get all the way up to this 199.83, which is the low of December 18th. Big number. And the NDX 100, same setup in the NDX. Now, what the NASDAQ has done is this. The NQs got back inside its range, okay? So that brings the probability also higher. And what I'm specifically talking about is this, is that the 3Qs broke down into a lower range February 5th. We went from 101.33 down to 97. We continued down and got into 94.84. That's out of the range. We jumped higher and got back in the range this morning. $99.51. That's the bottom of that range. Now we're at 99.82. What does that set up? That sets up that it wants to go after 104.80, and we'll see how it handles that. But the Qs can get actually all the way up to the 109 area. Big number. Gold contract. What do we have with gold? Wide price spread in gold out here all day long. The low out here was 11.91. Your high is 12.17. Right now, we're trading at 12.03. What gold did, folks, is this. You got to love this. Technically, this is just so cool. So we broke out of the 11.91 area. We did that on Thursday. We broke out with 366,000 contracts. You move them back in with 313,000. It's rejected lower price at the 11.91. Bottom line, you'll build some cars up here for what? You're going to build cars for higher price. Bonds. What do we have with the 10-year note? Let's go look at the note. So the note right now, the 10-year note had spiked, had a nice spike high on Thursday. That spike high went to 133.01. We did that with 2.4 million contracts, which is huge contracts. Now, within 2 days, you back down into this 130.20 area. This could be just a normal retracement in a market that wants to go higher. And if the volume doesn't expand as we move lower, that's what you can expect this is going to be. You know, we'll see how this shakes out. Now, just a normal retracement, however, inside this market, your first leg would bring you to 129.26, which is that's another point down. I suspect where we'll probably get is 129.08. You get an expansion of volume, then that's a whole different animal. You get an expansion of volume off highs, that would set up a much larger correction on the way down. King dollar. What do we have with King dollar? King dollar is doing a nice counter trend bounce out here. You've done 16,000 contracts. King dollar is laying out here at 96.87. That is going into 60,000 contracts, 41,000 contracts. Bottom line, this is the B2C of an ABC structure on the way down that wants to go down and test the August 24th low, which is 93.12. Yeah, if we do go look at that those gambling stocks, these things are moving. They're moving really nice, no doubt. You had Wynn Resorts right now is up $4.68. You're at 73.88, and that's going after their higher swing points, and it's taking them out with volume. So it's going to be looking like today. Wynn on Friday rather, went from 62 to 69. Today's gone from 69 to 76. Las Vegas Sands, LVS, I suspect you're going to see the same type of deal. Both of these move on the aspect of Macau, China. LVS has just gone from $39 up to $45.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Dow Industrials up 192, NASDAQ up 87, S&Ps are up 30. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 202. You get the NASDAQ up 89. S&Ps are up 31. And we take a look at the volume out here, folks. What you're going to have right now at 782 million on the NYSE. That's saying we'll come in at about $1 billion. On the NASDAQ, we're dealing with 1.5 billion. So the NASDAQ's going to come in with some juice. That'll be a couple billion shares, which is not bad. You still get a contraction of volume as to how we come down, but that's not bad to go up to the swing point as we go into the short week. And, of course, you got option expiration that's coming in Friday, folks. So let's go over first to the oil patch, the XLE. We take a look at the XLE. XLE right now is trading up 54 cents, $55.82. This little baby is also wanting to get up to the swing point, the higher swing point, which is 58.50. You know, we'll see how it handles it when it gets up there. The oil contract itself, you talk about, some volatility out here, CLJ6. This contract was at highs before our market actually opened. I think it was 0400. Let me see this for a second. Yeah, it was. It was 4 o'clock this morning. So at 4 o'clock this morning, you had the oil contract hanging up here at $33.78. It sold off all the way, all day long. It's coming into, however, where the strength came in last Friday when our market was opened at that 31 level. So we'll see if, in fact, it can continue to basically get some juice, get a bump up. What you had out here today is that Saudi Arabia, let's see what they have to say out here. They're freezing oil where it is, folks. Well, that's what they're claiming. But the bottom line is that they're pumping record outputs. And so they're freezing at a record output. Is that going to make a difference? Well, it hasn't made a difference yet. Let's put it that way. That's what it comes down to. It made a difference all of about 30 to 40 minutes this morning. Saudi Arabia and Russia agreed to freeze oil output at near record levels, the first coordinated move by the world's 2 largest producers to counter a slump that has plummeted economies, markets, and companies. While the deal is preliminary and doesn't include Iran, it's the first significant cooperation between OPEC and non-OPEC producers in 15 years. Will this baby get to a higher price? I think what you are seeing out here right now is that we do have a bounce in that market, and just as the S&Ps, the Qs, this is basically a dead cat bounce, folks. But I suspect it's going to last a while, too. That's the other side of it. Let's go into the, you talk about the financials getting killed. Now, the financials, they got, if we take a look at the XLF, you're going to see something that's just amazing, actually. So the XLF, we go back even, a month. The XLF's trading at 25 bucks, $24.89. Last Thursday, you're at $19. And what are you doing? Well, what you're doing here, folks, is this. We have the high volume swing low from August 24th. That's $18.52. What we have now is that when we came down, we get another high volume swing low at $19.53. That's building cause to, number one, at least test the $18.52. And if we bring this back and we have this set up, we'll see how that test gets established. What we did have in January is this. January, we came down with, this is for the month, we came down with 1.3 billion shares. Now watch this. The August low had 1 billion shares. So what that is saying is that as we were going lower, you had an expansion of volume. That's a huge problem, because it looks to me that the XLF is lined up to run into this $15.03. $15.03 is the high of August of 2011. And there's plenty of equities thus far that is already broken. We were looking for a long period of time. If we go back 6 months ago, we were looking at the high volume swing low and the S&P, which was the October of 2014 level. That was 181. That market stayed at the highs. It comes smashing down in August, gets into 182.40, comes down again, and breaks it in January and gets into it. Now, when you line that whole deal up, this is, you could actually just be starting in technical analysis and look at this and ask someone, where is the power? Just to give you an idea, on a weekly, the last three lows, this is how they stand out. The week of October 17th of 2014, 1.3 billion shares. August 2015, 1.6 billion shares. January, 846 billion. Now you can see what happened there. You get lighter volume, you get a bounce, right? Now watch the highs. Those are the lows. The highs. This is sick. So we had a spike high that couldn't handle it. That was 1.2 billion. This was December of 2014. Then we tested the 1.2 billion with 400 million in February. We did another test with 600 million. And then we did another test with 466 million. There's no buyers up there. This is a seller's market. I expect this bounce is going to be here, but it's a seller's market, folks. That is building cause, and it's building cause to go downtown. Copper, let's go over to the copper market now. The copper market looks to me like it's coming off the lows. And this is where the commodity complex itself is catching a bid, and I expect you're going to catch more of a bid. Copper right now got to a price point out here today of 208. This is pretty cool, too, so check this out. Let me make sure I get the right contract, because this came in with nice volume out here today. It didn't hold price as much as it should have, but that's all right. There we go. Okay, we're on the K contract. Now, okay, so we're up 2.5 pennies, 205 a pound. You still get volume. Awesome, man. Okay, so check this out. This is pretty cool. So copper, folks, has been consolidating since November 23rd. And your first high out here, and we got to 215. You come back all the way down to 194 in this contract. You go topside again and get up to the 214 area. That was just February 4th. You back down again with dramatically lighter volume. And today, you had volume topside. It didn't hold price. It was up a couple pennies, big deal. It had been up 5 pennies. But you had a huge expansion of volume. When you get that, this is going to go after that swing high up there of the 214.05. And we'll see if, in fact, it has enough to get up and over that level. SCCO, we go take a look at one of the larger copper companies. This is Southern Copper. This is going to need a little more juice. It's consolidating. What you are going to need, though, you're going to need more volume as we get into this swing point of 27, 26. You know, right now, today we've only done 1.2 million. That needs a couple million as we get into it. Some of the Dow stocks out here, this is what we have. In fact, let's see what's moving the Dow and the NDX 100. The movers inside the Dow out here today, you get Boeing, that's a dead cat bounce, that's up 397. Caterpillar's up 210. Cisco is up 78 cents. Apple is up 276. You stay right there, folks, and we come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now we have the Dow up 211, Nasdaq's up 94, S&Ps are up 27. We go back to this Dow Industrials for a second just to see the winners versus the losers. Boeing is the leader out there. Caterpillar is second, Cisco and Apple. Taken away from it is Chevron, Walmart. Chevron is down... Oh, look, no, this is awesome. Chevron just went positive. That's hilarious. So Chevron's up 40 cents. Walmart's down 38. Travelers down 31. Let's go to Al in Colorado. Hey, Al, what's going on?
Tom. Say, I've been enjoying your show for years, and this is a special day for the volume on the Globex for gold and silver because it's accumulated for the last 2 days because it traded Sunday night through Monday about noon. So gold had 127,000 contracts on Monday at noon, and silver had 36,000. So for today's volume, you have to subtract those two from what I have, about 313,000 and 82,000.
Well, I appreciate that feedback, man. It's a beautiful thing.
Yes. No,
listen,
I watch gold and silver like a hawk.
to me, gold, what you have out here, it's just pretty wild, folks. I was just coming across the tape. There's a Trading Nation, CNBC, gold is done. Goldman Sachs comes out over the weekend, says it's going to $1,000. That's a perfect set. That's a perfect setup for basically higher price.
Yeah, that's right.
If we take a look at just the characteristic of what we have here, I get these. So what happens is that when I'm looking at the Bloomberg, they've added these together evidently. Well, I don't know. They didn't add them together. What you have is this. We went up on 366,000 contracts on Friday, and we pulled back with 314 today. So,
Yeah, and that's for 2 days. Of course, there was a lot of reduced New York trading yesterday because of President's Day. There was 127,000 contracts in gold traded by noon yesterday from Sunday night. And so that would leave about 180,000, which is really light volume on the pullback.
That's right. And what is so cool about the gold market, folks, is that the gold equities trade around the world. So you can hunt around the world to see how they were trading and how they are trading. And
I get my information from the spot prices off of kitco.com.
Yes. Oh, listen, there's real action. I mean, there's...
Well, thanks very much, Tom, and keep doing what you've been doing. It's great.
Thanks so much, man. Have a great one. Have a safe one. If we go, silver needs a bid, folks. Silver is a different animal than gold. It's pulled back today. You got 82,000. That's lighter than how we went, but bottom line is that the silver contract is a lot weaker than gold, dramatically so too. And what's cool is that the silver equities have been catching a bid since last week. That's how this whole thing is set up. There's a couple gold equities, Wrangell Resources being one of them. That's a major breakout. If you take a look at Wrangell, what you're going to see is that it took everything out, and it took it out in spades. I mean, it's pretty amazing actually what it did. Wrangell's been in a consolidation for 3 years. And when you take a look at this consolidation, it just took it apart with huge volume. So Wrangell is saying to me they can go to its highs. Now, if Wrangell's going to go to its highs, folks, we're at 84. Its high of 2012 is 127. These equities are going to move. And if you're in the gold or silver market, you know that these equities have already moved dramatically. They're talking about 30, 40, 50, 60, sometimes 70%. And it's one after the other. And this has been in the last month. It's one of the best runs I've ever seen, actually. It's not one of the best runs I've ever seen. This is how gold and gold equities like to come off bottoms. That's just how they come off a bottom. When they basically say that, hey, you don't have to catch the full bottom, but when you catch a bottom, it is no doubt pretty incredible. Because in Wrangell's case, you can see what you had there. In Wrangell's case, in 3 weeks, it took back 3 years. If we go over to Gold Corp, you're going to see Gold Corp just went from $9.46 to $16. So, bottom line, I suspect that's going to go a lot higher. So when I cut to the chase in this market, what you have is this: we're doing a counter trend bounce. I expect, because of the way that we kept selling off, this counter trend bounce will be a decent counter trend bounce. Because it has to get everyone bullish again. That's just how bounces work. Has to get them bearish inside the metals market, but that's going to be easy because everyone's still bearish. They have been bearish. Now they're totally flipped out that gold went so much. Okay, so that's perfect for the gold market. The bond market's still a wild card out there. The bonds very well could hit the highs again. So if the bonds are hitting the highs again, that's saying that, the market's going to go south very quickly. So we'll see where that one shakes out. The dollar index wants to do an ABC structure on the way down. So short term, you get a nice bounce going. We get option expiration on Friday. Long term, you're building monster cars to get into lower price. And what we have here time-wise, too, the time of the year is totally set up that you'll have nice volatility, nice trading, and I suspect we won't see a major bottom until probably October, November. That just kind of, we're in February, you get March, April, let's say you bounce up to beginning of March. April, you start going down again. You do a nice little other bounce. In the middle of the summer, we'll get some kind of a rally, and then second week of July, you start south. And where I'm coming from with all of that, folks, nothing is ever the same. It's always a little bit different. But what does happen is that markets themselves, particularly when people get nervous, you gotta remember they're going away. They're trying to get cash. All of the above. It's pretty cool, actually. So let's take a look at some of the higher volume stocks out here. We got Bank of America, and the banks, folks, are in tough shape. These banks, man, they claim that, okay, so our banking structure in the United States right now claims that it only has $500 billion out to the energy sector. And, maybe that's enough to basically tank these banks down pretty good. That is tremendously different than what was out there in the real estate. Bad paper in the real estate was $13 trillion. What I think may be the difference is this, though, is that what the banks did inside the bad paper in the real estate is that they stuck everyone else. They stuck themselves, but they stuck everyone else. What's real possible inside the energy market is that they have the paper, and it's not out. And if that's the case, then guess what? That's what this market is saying with these banks. You get Bank of America is up by 29 cents at $12.24. Freeport McMoran, one of the Tigers wants to take a look at Freeport McMoran. So FCX, that's getting a sign of strength. And this is what FCX needed, actually. You're up 82 cents, $6.34. I would like to see a little more volume, but this is off the bottom. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to the NDX and see what is leading the NASDAQ higher. We take a look at this, is that you have C-Trip. C-Trip is up 8.5%, $3.14 at $40.27. You get Yahoo up 8%, $222. JD.com, so you get two out of these four Chinese stocks. You get JD.com, that's up 7.5%, 179, and Liberty Financial is up, Liberty Global rather, is up 7% at 239. Taken away from it, Mattel is down 1.6%. You got Walgreens down 0.9%. Facebook is off 0.7, and Autodesk is down 0.4. So inside that NDX 100, you don't have many losers because out of 100 stocks, that last one, that Autodesk, that was only down fractionally. We go back over to these Qs for a second. These Qs are going to stay inside this this higher range. So once you're inside this higher range, what's going to be game up here is that 104.80 mark. And there's no doubt that there's plenty of equities that coming out, continue to come out this week with numbers. After the bell out here, you're going to get Allergen Technologies, Boyd Gaming, Cheesecake Factory, Fossil Group, Maxwell Technologies, Potbelly Corporation. You know, Potbelly, if you've never had one of those sandwiches, folks, they're great sandwiches. The stock's not that great, but the sandwiches are amazing. I think they started in Chicago, I believe. That's where I've always had them. I haven't seen them anywhere else, but I know that they're a lot of different places. Rackspace Hosting, and let's see, Watts Water Technologies. Thanks, Dave, for putting those up there. I'll let Tiger say I already got a pot belly. Well, what can you do? But actually, let's go look at let's see, pot belly. I want to see what this PB. Let's see what this looks like. PB. Okay, so this trade, it's up 63 cents. They traded 11.20. Pull this back. This is a recent IPO. Yeah, this went one way. I can see how this is going. Okay, so this one IPO, amazing. Oh man, this is crazy when they push these things out. Okay, so this one IPO at $14, October 2nd of 2013. And what it looks like is that, just like other IPOs, they bring them out, they suck them in. The stock went up to $33, same time it went out, and then it went straight down. $33 down to $10.90 and down to $10. So when you look at something like this too, 1091's not a bad little setup here down at the bottom. But that's what it probably should have went IPO'd at, not 14, and they swing it up to 33. Let's just take a look at what they take in here. Yeah, taking a lot of money, man. So check this out. This is a lot of money selling potbelly sandwiches. Okay, so 2014 they took in 327 million. 2015 372 million. This year they're looking to take in 420 million, 107 million per 90 days. Big numbers, you know. Now bringing down to the bottom line, that's a whole different animal. They're claiming they're going to make 27 cents this year. You know, we'll see how that shakes out. Let's go over and we take a look at the one. So Boeing today is the leader inside the Dow Industrials, and this is how when you're bisecting and dissecting markets, you can get a huge amount of information out of finding out when you get a bounce like this, what is the leader? Okay, so what is the leader? Well, today the leader is Boeing. Well, Boeing just went from a price point of $150 down to 102. So it lost 33% of its value in a month. Would make sense that it's going to bounce, right? So that bounce, that correlation, it's bouncing $3.90. It's doing 5.4 million shares, which is anemic volume. That's the type of information that you want to put together when you're looking that, is this a bounce or is it real? And we're going much higher. You know, what Boeing also has, and you'll be able to see this quite clearly, when we had come down in August, it had the high volume low at 115. We had done 92 million shares. It went from 115 to 150 and did 52 million. So watch, 92 million at the low. It goes up $35, and at the high it had 52 million. Correlation, that's people walking in the store. There's no one in the store, and they're screaming and yelling, saying, take my money, take my money. It's amazing, right? And then what ends up happening? Stock lets loose again, makes another low. The next low it makes, as it was testing the August low, was with 135 million. So that correlation, 135 million versus 92, what does that set up? You get a dead cat bounce. That sets up that Boeing wants to run down to $78. Those are the different types of correlations that you want to wrap your head around, see how they work out. We go to the second leader out there today is Cisco, CSCO. We take a look at Cisco. What has Cisco done? Cisco's gone from $29, made a low on Friday of 22. We put this up on a monthly also. What you're going to see is that Cisco's under consolidation. It's not really a mess. But Cisco, we're at 25. Yeah, the consolidation, the top of that consolidation is 30. The bottom of that consolidation is 29. And if I put this back on 20 years, yeah, that consolidation can stay in place. You know, this has been in a consolidation, but each and every time it goes to the high of this consolidation, this is pretty cool watching this on I get this on a 25-year chart right now. Each and every time Cisco gets up to the high of this consolidation, it does not have any juice. It's going to be, I don't think it's a problem yet with Cisco. I mean, it's not going to crash and burn, but it's a problem on a longer basis, because what that's all about at highs there, that's pure distribution at the top of consolidations. And in Cisco's case, Cisco has so many shares, it's absolutely insane. Cisco has 5 billion shares outstanding. That's like insanity. 5 billion shares, yeah, huge numbers. When we go take a look at overseas, what we have, the FTSE. So what the FTSE did yesterday when we were closed, folks, FTSE got off its lows, got inside the higher range. Yesterday, the FTSE went from 5,700 to 5,840. Today, it gets up to 5,862. FTSE's going to make its way up to its swing point from February 1st. That is the 6,100 mark. Now, the DAX in Germany has more problems. The DAX can't seem to get inside its range. Now, the DAX, you're going to want to keep your eye on tonight, because we're at 91.35. At 9,300, the DAX would be inside the higher range. If that DAX gets inside the higher range, you could see our futures open up 35, 40 S&P. It'll go that quick. Why will it go that quick? Because that's what happens on counter trend bounces, folks. Counter trend bounces has a very fast and furious move topside when you're going downtown. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 194. You get the Nasdaq up 93. S&Ps are up 30. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing, man? Blue skies today, bluer tomorrow over here.
Yeah, it's beautiful out. We got spring coming, man. It's a good thing.
As you would say, this weather's insane.
It is. GLD, that we're going to look at?
Yeah, I talked to you a little bit about it on, I think it's Friday, Tom. Those 133 calls out there in May. I was even thinking about doing an iron condor on it as well. Just wanted to get your take on that. I haven't had a chance. I just turned you on.
Okay, so what you have is this. You know, we went topside on Friday. You get up to 120.84. We do that with 49 million shares. We had on February 8th, we had 28 million shares. You're at you get to 114.82. You're pulling back with 13 million shares. That's normal in a market that wants to go higher. You know, you went up on volume, you pull back with lighter volume. That's building cause for higher price. And what is really what happens, folks, is that the gold trades 24 hours a day. The only time that it closes is that it closes Friday night rather, in the U.S., open Sunday in Asia. What you had yesterday, because we were closed, that doesn't mean a thing inside the gold market, in fact, inside some of the equities. Because what you can do, a lot of the gold equities, folks, trade as ADRs. So what you want to do with those is you want to go to the main exchange and see what happened. And I can tell you, Tom, with the main exchange, these gold equities, they're probably ABC structures on the way up. So that's saying that the gold contract also wants to go higher, you know. Now, because we had such an expansion, you know, you got to build some cause here. And you being a bull, you want to build some cause here, you know. A couple of these equities actually, though, look like they're just going to take off again. So it's going to be wild watching this shake out. Because my take is that, you probably heard it, is that, you know, I think the broad market is you know, going to bounce right now. The bond market looks like it wants to pull back a little. The commodities market is basically setting up its next leg, you know. So the next leg up, that is. And it's just not gold and silver either, you know.
Right.
And the good old king dollar, you know, is setting up an ABC structure on the way down, you know. So I like the setup. Okay.
All right. Well, I didn't know if I was going too far out there in May, but that way, you know, it.
No, you should go, when you have a run like this, you should go out that far. That's, you know, because you're not, your probability is going to go higher, you know, that you're going to get that run. The way, you know, you might have heard the way Rheingold is trading. Rheingold wants to go to its highs. If Rheingold broke topside, and they broke topside in a big way. In fact, if you, here, I'll show you Rheingold at its main exchange. At its main exchange, okay? Rheingold is an ADR, folks. Its main exchange is in London. When you look at this main exchange, how this traded yesterday, I was dealing with it yesterday, okay? This thing is insane. You know, Rheingold in pounds is at, in pence is at 6,005. This went topside, 1.3 million shares. You know, yesterday we did 614,000. Today we did 880. This thing looks like it's going to be another ABC up. You know, so if that's the case, that baby wants to go and wants to go in an incredible way. So I think we get action, and there's enough pessimism out here that they think gold is done. The ironic part about that is that who's ever even looking at that, they absolutely are not in the market, because the gold equities, folks, have had a better run than the market has had in 3 years. And they've had that in 4 weeks. So when they say gold is done or hasn't been there, guess what? They're not even looking. Stay right there, folks. Thanks, Tom. Have a great one. Have a safe one. Coming right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Market-wise, let's take a look at it out here. We had the Dow finish up 222, NASDAQ up 98, S&P's up 30, gold contract down $38.40, traded at $1,200 an ounce. Silver down 53 cents, $15.25 an ounce. Platinum off $4 at $9.31 an ounce. Copper up $2.25 at $2.05.15 a pound. Light sweet crude down a buck. Down 73 cents, $31.18. Bonds. We had the 10-year note down 6 ticks, 130.27. 30-year off 1 full point, 165.15. And King Dollar up 938 ticks at 96.92. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You have the SPY up 315 today. We're trading at 189.78. Bottom line is going after the swing point from February 1st. That swing is 194.58. You have a contraction of volume, so this is a complex ABC structure on the way down. You came down with volume from December, going into the first low that was established out here January 20th. You're going up with lighter volume. What I do expect you're going to see, though, this is going to be a good bounce. It'll be lighter volume. You want to be able to sell the heck out of this thing somewhere about the 199 level. NDX 100, same setup. The SPY, what the SPY did is this. The SPY got into its higher range. Now, this is a big deal. The reason it's a big deal is because it is putting more probability behind the move higher that you're going to get a decent bounce. Because the NDX 100, the 3Qs, it fell out of bed last week. It got under the price point of 99.51. You traded down to 94.84. We got back inside that range, and when that happens, first off, you have a price projection of 104.80. But I suspect somehow, some way, this thing is going to bounce somewhere into the $109 level, which is, yes, insane, I know. But bottom line, because of the amount of times that we kept hitting into these January 20th lows, folks, that's kind of like what markets like to do. I'm sure, most people were sitting here today waiting for another sell-off, and the market is so cool that the market did. Here, if we look at this S&P for a second, what the market did do is that intraday, guess what? You had it going downtown. We started the day out. As we started the day out, that S&P future, we're up at 1891. It got all the way down to 1865, and then it said, see ya, don't want to be ya. Went right topside once again. Gold contract, what do we have with gold? Gold pulled back into the breakout area. We hit 1191. We've done that with 317,000 contracts. That 317 is going into 366,000. That's a normal occurrence in a market that still wants to go higher. You spike higher. We spiked higher in an incredible way. 366,000 went from 1196 up to 1263. You pull back with lighter volume. Bottom line, I suspect we're going to build some cause at this particular point. That gold market will stay volatile, no doubt about that. But that gold market, when that broke topside last week, it broke topside. 1392 is the next price projection in gold. We go over to the oil market. We take a look at oil. What you have with oil is this. You had OPEC and the Russians come out and agree that they're going to keep production at high levels where they are right now. Bottom line, does it mean anything? Not really. That spiked the oil contract, however, and it spiked it pretty good at 0400 this morning. And we got to a price point of 33.78. You closed out at 31.18. This, my take, is that we're going to go back up to those levels. More than likely, you're going to get into even 36.28 inside this contract. The 10-year notes, what do you have with the notes? They back down slightly. You got 1.4 million contracts. And as the market does go higher for the next few days, I figure we will back down. Now, one of the keys inside the note and the bond would be this. Right now, we're just backing down a normal volume. And that's saying that you have a high spike from Thursday, which can go get tested. If we continue to back down like this, it will go get tested. So it's going to be really cool watching that part of it shake out. If, in fact, and this is another correlation that you can kind of put together with the S&P. If the bonds have a huge expansion of volume, and you have volume off the high, that's a different animal. And then that different animal, you would better be prepared if, in fact, that happens in the bond market, that the S&P would bounce even further higher. Why? Because it's just a direct correlation, inverse correlation to where the S&P wants to go versus the bond market. King dollar. What do we have with King dollar? King dollar is doing an ABC structure on the way down. We went up today 953 ticks. You did 17,000 contracts. King dollar is coming at 60,000 contracts. Bottom line, this is the second. If we go look at King dollar, on the 3rd of December, King dollar went from 100 to 97. Monster volume on the way down. Consolidated from December 3rd over till, check that out, till February 3rd. February 3rd, what does it do? Gets croaked again, goes from 98 to 96. Bottom line, I expect we're going to build some cause here. What King dollar wants to accomplish is go after it's August 24th swing low. That's 93.12. And we'll see if, in fact, it gets there, and how does it get there? Does it get there with wide price spread, accelerated volume? If it does, guess what? That would be laying out much lower prices, because if we actually do go look at King dollar, what you're going to have on a much longer term basis is this, is that the way King dollar is set up is that this has been a consolidation for quite a while inside this area of, let me put this back 1 second. This is. If we put this back, we've been consolidating in King dollar right now since January of 2015. You get a break of 93.15, King dollar can be down to 88 in about a heartbeat. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 222. NASDAQ up 98. S&P's up 30. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow finished up 222, Nasdaq up 98, S&P's up 30, and as we do each Tuesday and Thursday, we got our man, Mr. Andy Heck. And don't forget, folks, at TFNN, Monday, Wednesday, Friday, we do 10 hours of live programming, 8 o'clock in the morning to 5 o'clock at night. Tuesday, Thursday, we got 11 hours going from 7 in the morning to 6 at night. You can get all of that right on your cell phone. Just go to TFNN.com, hit Tiger TV. Andy's got an outstanding show right after my show, 5 to 6. Also got a great newsletter, the Technomento Commodity Report. He bisects and dissects all these commodities out here, folks. And you do not have to be in the futures market in order to trade them. Why? Because we have so many ETFs inside this market. Andy Heck, I heard we got a great, you had a great weekend.
I had a great weekend.
You got a new life coming on.
Yes, I got engaged.
You got it. Congratulations.
Thank you. Valentine's Day. Picked Valentine's Day to do it, which was really nice.
Good for you.
And
that's awesome.
It's really good. Yeah. So very happy.
Well, I'm happy for you and your wife-to-be. That's awesome, man. That is absolutely awesome.
Thank you. So, crazy markets, huh? Oh, my God.
They're good markets, yeah.
Oh, my God. Gold?
Yeah.
Up and down and all around. But it's still $140 higher than when it ended on December 31st. We have to remember that. And technically, it came right back down to that the level that we broke up from, right?
Right.
It's kind of a perfect thing. You know,
and realistically, just so folks, I mean, gold can still go back to like 1157. That's, we just ran from 1070.
It can do anything.
Yeah, well, I'm just talking about technically. It doesn't, you know what I mean? It's
absolutely. Absolutely. I mean, the thing I find very funny is that Goldman Sachs and JP Morgan come out and tell us that everything is wonderful.
Except gold.
Well, it's not. Everything is wonderful in the world. But meanwhile, the price of oil is $29 a barrel.
Yeah.
The dollar kind of ticked back up strong today.
Yeah.
I think that's based on these Goldman Sachs, JP Morgan. There's kind of vested interest in this whole thing for them, to say that everything is wonderful. Don't worry about the European banks. Don't worry about this. Don't worry about that. But at the end of the day, there's still a lot to worry about.
Oh yeah, we know that they've never said anything different. I mean, that's a normal deal. The only way, folks, that the structure of the marketplace is to keep saying, put your money to work. You hope you're going to have money before you die, and guess what? If you die, you don't know whether you made money or not.
It doesn't matter. Right?
It's sad.
Once you're gone, you can't take that with you.
Right.
It's look. Goldman Sachs said gold's going to $1,000 an ounce. He's been saying that all along, no question. He's staying with his call. That's Jeff Curry over there, who's their head of research.
Okay.
I think the interesting thing today, the takeaway today, is what happened between the Saudis and the Russians, where they said that they're freezing production, which is basically saying nothing, And the statement is meaningless without the Iranians saying it. Now, if the Iranians said they were freezing production, that would be one thing, because they've told us on multiple occasions that they are using the opportunity of sanctions being off to sell more crude oil. So really today it was a big announcement and all kinds of hoopla. but it was nothing. I kind of laughed when I heard it, because it was just kind of more of the same. And as long as oil stays down here, it's going to drag down oil stocks, whether it's producers or explorers or it's people who do oil services,
Sure.
you know.
Right.
And as long as they get dragged down, there's problems in terms of the equity markets, and Tom, there's problems in terms of the debt, because they're not going to have the money to service their debt. So I don't know what these grandiose statements by JP Morgan is. Now, it all started last week when Jamie Dimon said he was buying $26 million worth of JP Morgan stock.
Sure.
So this is kind of round two. I think when China comes back, we're going to find out what's going on. China didn't all of a sudden, get over their economic flu over the Lunar New Year.
Well,
that's still there in a big way.
What they did do, which, what China did, folks, and this was so cool, actually, they turned around and revalued their yuan.
Right.
They do this all the time, but they put a twist in it, because most of the press coming over this long weekend were thinking that they will devalue, and they just did the opposite. So
Right.
that was a good twist in the marketplace, there's no doubt.
Right, exactly. So it's going to be very interesting to see. Copper looks like it could bounce. It looks like it could go back to 215, and that's the key level. Copper is so overdue for a technical bounce here. I mean, so overdue. But it's so hard. There's so many divergences out there. You know what happened?
There are.
What happens in oil here? What's happened in precious metals? That basically weighs on copper to some extent here. But I look across the board, everything, even grains were up today, and the dollar was up. So nothing makes a hell of a lot of sense. All it tells me is we still have a lot of divergence in markets.
And we'll see where this shakes out. But I think these commodities are off the lows, so it's going to be interesting. Let me just look at something for you. And if that's the case, yeah, see, Valley's moving too. You got iron ore starting to move too. So this is, we'll see where this shakes out.
Yeah,
but
exactly. Nothing goes in a straight line. Even the Baltic Dry Index bounced today. A little bit.
Oh yeah, listen, man. If I've learned anything over the years, what ends up happening in the commodity business is that the rigs, they spend hundreds of millions of dollars to them, right? And then all of a sudden, oil goes down, and they just got to scrap them all. 1 second it's worth millions of dollars, next second it's worth 50 grand, right?
Right.
The same with the ships. What happens with the ships, folks? They go like that, and then all of a sudden they scrap them. And it's just a question of how many ships they already scrap, right? I mean, it's like, it's vicious,
Absolutely.
man. It's a vicious business, man. Yeah.
Oh, if you look at the shipping stocks, forget the oil tanker stocks.
I
You look
know,
at the
man.
dry ships.
I know.
And Genco and the other. Oh my God, not Genco. Some of the others. TK. Oh my God. These
Yep.
things are. I mean, they're basically BK.
Yeah,
You know?
that's what I was going to bring up too, Andy, is that they had so picture this, folks, and I brought this up on the morning show with Tommy and myself this morning and Kevin Hinks. It seemed that in the financial press, folks, all the interviews, not all of them, but just about every interview I've seen, is that they've had bankers on from Texas, politicians on from Texas. No, it's different this time in Texas. Okay, we're not dependent on oil. Well. And Bloomberg this morning, they crossed, in the last 4 months, this is the 60th oil and gas company out of business, bankrupt last night. They're hurt.
Right.
They're
hurt.
Yeah, they're
There's no
hurt.
question.
That's as they say, a recession is one thing, but you don't have a job, it's depression, and those are big paying jobs, man. So that's yeah.
Right. Very, very difficult indeed. Hey, listen, on February 25th, I'm going to do a workshop.
Oh, cool.
On grains.
Okay.
Basically, we're coming into planting season.
Yeah.
And if you look, a lot of these, the fertilizer stocks, the farm equipment stocks, the seed stocks, farmland, all this, very reflective of what's going on in the grain market. So on February 25th, which is a Thursday night, I guess a week from Thursday, from 6:30 to 7:30, I'm going to dissect and bisect everything from corn, soybeans, wheat, to the companies that support them.
You stay right there, man. It's hard to believe
Sure.
that February 25th is all that quick, man. Oh, my God. You stay right there, folks. Andy and I are coming right back. We'll be right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. We're talking commodities, and, you know, it's always fun, folks, when the 13F filings come out, and today is when they come out. What a 13F filing is when large funds get in and out of equities. Now, these lag by 45 days, but they can give you some insight as to what's going on. So I just pulled up the GLD. And this is going to be this is pretty cool, Andy. This is pretty sick, actually, because I hadn't seen this happen before. Fidelity, okay, gets in the GLD market, man. 2.3 million shares. Now, it's only 1% of it, but that's kind of interesting. That's real interesting, actually, because when I first started the Gold Report, Fidelity, folks, was the only company, in fact, no institutions owned any gold, and Fidelity was the only company that owned a company, and it was Gold Corp. I want to see something here for a second, 1 second, because Fidelity also has been a big supporter of Rheingold Resources. And, you know, they go in and out. When they're going out, it's a killer. They're going in. Okay, so 1231, they own 2.5% of it. They bought another 167,000 shares. We can go through some more of these a little bit, but those 13 Fs, folks, can give you basically a decent, well, they give you information. That's what it comes down to. Andy.
I'm here. I said that's about 7.15 tons of gold that they bought.
Yeah. And well, yeah. And what also happens,
they own.
What you do have, what did happen last week also is that because the GLD went up so dramatically, the GLD itself had to buy 1.7 metric tons of gold that night. So it's going to be interesting to see if they move that out tonight. Now that's the yin and the yang of that whole deal.
Absolutely. I mean, the one thing that's kind of been bothering me all the way up is that silver and platinum, they followed gold, but they didn't outperform.
No, they're
silver
weak.
Certainly didn't. They're very weak compared. I mean, platinum made a new low against gold last week. We were talking about it.
Right.
It was $290 under. Now, with this correction, it's about $270 under. The platinum, the silver gold ratio, 78-1. So that hasn't moved much. Actually, silver got weaker even as it rallied.
No, I know.
So, all kind of a funky stuff going on here. It's divergence everywhere.
Right.
Everywhere. It's that wherever we look, we find divergence. And you know what? Tomorrow, the next day, we'll see the stock market again, see issues. God knows what'll come out of China. Who knows where it's going to come from? But whatever's going to happen is going to cause volatility in all these markets. So you got to be quick to take profits when you have winners.
You do.
And to protect losses.
You do.
I bought a little silver at the beginning of last week. I sold it out, and now I'll look for another spot to get in. Gold, I'm a little nervous about here, but I think if 1191 can hold, it'll be interesting. But who knows? I mean, $40 move today, big move.
No doubt. Okay, so let's look at this for a second, because I don't. If we pull gold up, and you take an aspect of where we just went. So we just went from 1047 to 1264. 1181 is only a 0.382 retracement. That's like strong, like bull.
Right. So it could go back to 1156, basically.
Right.
Absolutely.
Yeah.
Absolutely. I mean, it could do it in a day. Who knows?
Oh, it will.
It'll be very
interesting. If we know anything about gold, that's how gold trades, man.
Absolutely.
Right?
Well, it makes for lots of opportunities, certainly. One of the things I wanted to put up here is corn.
Oh, hey, hold it. I'm sorry. Let's go over your workshop, man. Hold on. Let's do that workshop. Okay, so.
Okay, I put the chart of corn up here, and as we could see in 2012, corn was like almost $8.50 a bushel.
Okay.
We're going into this planting season. We're about $3.60 a bushel.
Wow.
So we're less than half the price.
That's amazing, huh? I know.
Big move. So farmers are suffering. And you know what's funny? Corn is actually expensive relative to soybeans. So farmers are going to plant a lot of corn this year. But we know that population is increasing. We know that there's more mouths to feed on Earth. And we know that the first year that we get a weather disturbance in terms of the crop, whether we get floods or droughts or any crop disease, these things have legs. These things can really move. So I'm going to look through in the workshop. First of all, I'll do a complete analysis of corn, soybeans, wheat. And then what I'm going to look at is the associated equities. I'm going to look at the fertilizer companies. I'm going to look at the processing companies that turn corn into ethanol or soybeans into meal and soybean oil. I'm going to look at the wheat differentials between different markets.
Oh, that's so cool, man.
Look at some of the fertilizer stocks which have been beaten down. And we're going to look for some bargains out there, some limited risk, high reward plays if these markets come back, if and when. It's not a question. It's not a question of if. It's a question of when.
I agree, man. And I love how you put those correlations together, though, because it's so cool. Because, folks, this is what we eat every day. I mean, this is life. This is not even, some people, you might know what your stock does, and you might never own a stock in life. But guess what? In the commodity market, we're there every day.
Right. Everyone's going to buy bread in the next year.
Right.
Probably in the next week.
Especially Italian bread.
Right. Baguettes. Yeah. I mean, it's wheat. It's important. This is, and if we have a disturbance, there could be, what the markets are setting up here are very limited downside, very big upside types of situations. So it's always good to take a look as we're coming into planting season, which really begins in March. And hey, Tom, March is 2 weeks away.
I know, man.
So we're going to do this at the end of February. We're going to take a good look. And by the way, the market's become very accustomed to low prices. And that's always bad. The 2012, when we had wheat at $10 a bushel, soybeans at almost $18 a bushel, corn over $8 a bushel, that's in the getting further and further in the rearview mirror. And people don't remember.
Yeah.
So now, 2016, we got prices cheap again. It's going to be very interesting if something happens. And it's a good, the fertilizer stocks have been beaten with a stick, It's a good time to look at these things and at least put them on our radar. And in these crazy, crazy markets, if we can find things that are trading at price to earning multiples that are very, very low, hey, those are the kinds of things we should start nibbling at on a scale down basis.
And I guess the cost of production, right? That's what's so cool about commodities too, right? I mean, once you get to the cost of production, they can keep going for a while, folks, okay? But then that's it. No one's going to basically lose money on purpose.
Yes. No, absolutely. And hey, the cost of production for all commodities has come down dramatically.
Because of oil,
I think
right?
Right. I think that really, to spark a real recovery in commodities across the board, we're going to have to see a oil price starting to head a little bit higher here. Now, this could be a bit of a head fake with OPEC and with the Saudis and the Russians and a production freeze. It could be the first step, but maybe they want the market to get nice and short, and they want to barbecue the shorts and then announce something. That's not out of the out of their realm of what they do.
No, and I think that's the game right now, because in large downdrafts, which I think we have, basically in the S&Ps, that's what ends up happening. This is the type of, rhetoric that you get.
Right. Hey, one last thing.
Yeah.
You got 1.9 million contracts of open interest in oil. That's big short. And the Saudis and the Russians know that.
I love it. Okay, brother, we look forward to the show in about 20 minutes.
Thanks.
Cooking.
See you soon.
Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at a few numbers out here. CERN. So this is Cerner Corp. This closed at $55. It's trading at $47. You talk about a beating. This is a beating. So this company is a worldwide supplier of healthcare solutions and services. The solutions are designed to optimize clinical and financial outcomes for healthcare organizations, ranging from single doctor practices. Bottom line is that this looks like it's an accounting system to make sure that they send into Medicaid and Medicare, that they bill them up to the hilt. Anyway, it closed at the $55, trading at $45 right now. And we take a look at this. Yeah, this is going after its lows anyway. So 48 is going to blow out. If you want to see, okay, so here, watch this, folks. You get a high volume low at 48 bucks. That's May of 2014. And guess what? You know, it's going to blow right by that high volume low. This was a, oh man, this stock's going to get toasted. So this equity here went from $8 in 2008 to 75. Right now you're trading at 45. Your next, let's see right there. Say, okay, so watch how this shakes out. You're breaking the $48.39, which is a high volume swing low. That sets up your next high volume, which is $39. This thing's a mess. Let's see what they have to say. Okay, the earnings per share was 61 cents. The estimate, you know, they come in, their estimate was 57 cents. They come in at 61. The estimate for revenue was 1.18 billion. They come in at 1.18 billion. Market doesn't believe in it. That's the bottom line. So there's something else out there. They actually beat on the bottom line. They beat on the top line revenue, but the market's saying, see ya, don't want to be ya. Fossil, F-O-S-L. I think this is the clothing company, I believe. Yeah, so Fossil, they design, develop, market, distribute the consumer fashion accessories. This closed at $34.46. That was up $1. This is trading up $4 at $39.66. And this has been a mess, but it looks like it may very well may be coming off the bottom. Let's see what Fossil's going to stay alive. Okay, so the net sales, the estimate was $928 million. They made $992 million. That's a big number. That's definitely a big number. You're talking about 62 million more in 90 days. Their gross margin is 53%. The estimate was that sales were going to be down 2.4%. They actually were up 1%. Yeah. So I wonder if they only own. Let's see. So, oh, that's right. No, this is the watch company too. Okay, the company's products include extensive line of men's and women's fashion, watches, jewelry. Yeah. So hey, people are out there buying watches. Agilent. Let's go take a look at Agilent Technologies. That's A. This is a spin-off a long time ago from Hewlett Packard. This closed at $37.08. It's trading right now at $37.08. So not much movement on Agilent. Let's see what they have to say. So they were looking they see second quarter revenue of $965 million to $985. Their earnings per share, the estimate was 43 cents. They're going to make 37 to 39. So the market's being kind to this company, actually. You know, they're not basically bringing them lower when in fact they're saying they're going lower. Now let's go back. We're going to go back over to the gold market, because when I was just talking to Andy, so the 13F filings come out today. So the 13F filings, folks, are large funds that have to file their last quarter, and they file them, and then it's public 45 days after the filing. So what we're going to be talking about here is who bought what 45 days ago. So in that context, that means that they can already have sold it. What I really dig about the filings in general, I've been just looking at them for so many years now, is that inside the gold and silver market, that market is so small, you can see when players are coming in and start accumulating and going out. And Fidelity is the largest player in the gold market, period. It's just amazing, actually. Now, this is the first time, however, that I've seen Fidelity actually come in and go after the GLD. You know, Fidelity normally goes after gold companies because they do homework. And guess what? Inside the GLD, they bit. You know, in fact, they were the largest buyer as of the last quarter. They bought 2.3 million shares of the GLD. So they own 1% right now of the GLD. Who else went in there? Credit Suisse? No, not Credit Suisse. Okay, Barclays went in there for 584,000 shares. You had CTC, not sure who that is. Belvedere, Susquehanna went in there. That's pretty good. I like that one. Now, let's see who went out. So watch. This is pretty cool, too, when you see who went out. This is where I love these when they're cleaned out. Schroeder Investments sold everything they had, 842,000. Ivory Investments sold everything they had, 622,000. This is what happens at bottoms, too, by the way. AFP sold no, that was in July. They sold everything. Morgan Stanley sold over half their position. They sold 3 million shares. They have 4 million left. You know, okay, so now let's go to a couple other. Let me see if anyone's going into RGLD, because most of these I get a really good feeling of how Fidelity got in and out of these before. So if we go into, oh, this is going to be cool, so check this out. Royal Gold, right? Who stepped into Royal Gold? Mass Mutual. Now, Mass Mutual, folks, okay, this is what ends up happening. Mass Mutual, Fidelity, and State Street, they follow each other. You know, I don't think they sit around there and talk to each other, but what ends up happening, you can see the filings. They're all in the same block. They're not in the same blocks anymore, but they're within blocks of each other. And I love it when I see either one of them go in, because one goes in, then the second one goes in. Mass Mutual came into RGLD and bought 488,000 shares. You had Wells Fargo come in and buy. St. James Investments came in and buy. Okay, so now let's go to Inico Eagle. See who came into Inico Eagle and actually came in and went out. Okay, so we got to find out. Let's see, there it is. Okay, so there's Fidelity. Fidelity's coming in. Oh, baby. So Fidelity came in with 1.8 million shares. Now he owns 4.2. It's a beautiful thing. Big time. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. We'll go through a few more of these before we're coming into the end of the show. Don't forget, I'm Mr. Andy Hicks. Coming up next, folks, if you're driving in your car, remember, right on your cell phone, TFNN.com, hit Tiger TV. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. As we're going through a few of these 13F filings, if we go over to Goldfields, we take a look at Goldfields next. This one gets really interesting inside Goldfields, and the reason is that BlackRock, which of course is one of the, they may be the largest money manager out there. They've been piling into Goldfields. They bought an additional 12.6 million shares. They own 7.8% right now of Goldfields, and it's spread out. If you happen to be watching Target TV, you can see when I hit the first, the holder, BlackRock, then it comes down and it shows all the different funds that they actually have this investment in. So BlackRock Group Limited. Oh, this is interesting. Okay, so check this out. This is a fund in Europe that in the UK that has the largest holder. That they get 60 million shares. Big number. There's no doubt that's a decent number. 7.6%. That is a very large number. Let's go look at Humana. AUY, we take a look at that. What you're looking for when you do this, folks, and it gives you an amount of information that was live 45 days ago. When I go sector by sector, what I'm looking for is funds that have bought multiple equities inside the same sector. That's what and the reason I'm looking for that is that funds don't come in once and just buy something. They come in, it takes them a long time to establish their position. You never know what that position is unless you are the trader at that fund, and then it takes them a long time to get out. So two different things end up happening. When they're getting into a position, and as we're bringing these up, you can see if Fidelity was getting into these positions in December. So it's because if you look at all these equities in December, guess what? That was the accumulation taking place on a sideways move, and then boom, and it goes, and of course now they're in a winning position. If we take a look at AUY, a lot of buying, a lot of selling too. There's nothing that really sticks out at AUY. If we go look at IAG, IM Gold, this little baby. Van Eck, what is happening? A lot of these are inside the ETF structures, and that always gets pretty wild when, in fact, they start going higher. What has happened is this. Now, I've seen this for a while. Renaissance Technologies, folks, is one of the most successful hedge funds ever, and they like trading in the gold stocks. Now. You can't get a lot out of Renaissance, meaning they go in and out too quickly. But Renaissance right now owns 1.7% of IM Gold. And they own a few others, too. In fact, let's go NGD. We'll do that. I'll pull up a couple for Tigers that have a request here. So New Gold. We take a look at New Gold. And, oh, there you go. That's a beauty. So Bank of New York came in with 11 million shares. They own 5.7%, 5.6%. Hartford Insurance, that's December. Renaissance Technologies again. See, this is interesting. Renaissance is, dipping their toes into this business. That's good though, man. That's Renaissance came in with 1.6 million. They own 7/10 of it. Hartford Investment came in with 1.8. A lot of other equities. You stay right there, folks. And man, Mr. Andy Heck's going to be coming up next with you, growling and prowling. Give him a call, folks. Congratulate him. He's getting hooked up. That's a beautiful thing. This is Tom O'Brien. This is TFNN. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night. Safe night. Look forward to speaking right back here tomorrow morning. Go get him, folks.